What's up, everybody? Welcome to episode 5 of the Moon Boy podcast. In today's episode, we're going to be talking all about risk management, trading plans, FOMO, and really just making sure that you guys are profitable in the markets if you're a beginner, or even if you guys have been around for a while and you just haven't been able to consistently make money. These will be really awesome tips to make sure that you guys take that portfolio and get it into the profit very quickly. I'm here with my buddy Donovan at DIY Investing. Make sure that everybody, you guys check out the description box because both of our channels are going to be linked in the description. And follow and subscribe both of us, as well as hitting that like button and sharing this video with everybody in this world. So thank you guys so much for tuning in, and we'll get straight into discussing risk management. So personally, risk management is a very big thing for me in my trading portfolio, because if I take a trade, I want to make sure that I am low risk and high reward. And oftentimes what people do is they just start taking trades and they don't even understand risk management. So they put like 100% of their portfolio in a single trade. And even on top of that, they'll do that with leverage. So they'll put like 100% of their portfolio into a trade with like 20x leverage and no stop loss.
I mean, we did just see what happens when people over leverage positions. XRP on BitMEX wicked to like 10 cents, so it was like a 50% drop or something. And a lot of people actually got their entire accounts liquidated. And so we saw that all over Twitter the other day. I don't remember what the guy's Twitter handle was, but some guy was furious with BitMEX, tagged Arthur Hayes, made a big rant about it. But the thing about it...
he got liquidated.
Yeah, he did. And that's the thing. I mean, he was complaining because he did have a stop loss, but the problem was his liquidation price was right below that stop loss, and so when that wick happened, there wasn't enough liquidity and it just liquidated everybody's stuff. And so it's kind of sad to see that happen, but at the same time, all of that would have been completely minimized if they would have been practicing proper risk management.
Right.
That's why margin is actually so deadly, is because these new people that don't know how to practice risk management, the people that don't know how to profit trading spot are trying to over leverage themselves. They're taking out these huge margin positions, like you said, and it's just leaving more room for failure. And that's, I mean, these exchanges, they're smart. Binance, you have 125x leverage trading, and all of these...
They want you to use those high leverage, because they make a lot of money.
They promote, and you always see CZ Binance always promoting it on Twitter, trying to show everybody to go use their futures, trying to use margin, and it's because these exchanges make significant portions off of fees. Not only that, but off of all of the liquidations that are being done, because retail money doesn't profit, and they're going to be over leveraged significantly far greater of the time.
And one thing that can happen with leverage, and that I think people need to remember, is leverage is kind of a complicated thing if you're a beginner. First of all, I want to put that as a disclaimer. You really shouldn't be using leverage at all. If you don't know what leverage is, it basically means that you're borrowing somebody else's money. So if you have, 1 Bitcoin, you can deposit it onto BitMEX, and then you could borrow 10 Bitcoin. So all of a sudden now you have 11 Bitcoin to trade with, and you can trade with that money. But the issue is with leverage specifically, your orders don't always get filled. And so what happens is, if you say you set a stop loss at a certain price and the market goes down to that stop loss, if there's already 500 Bitcoin in volume from some whale that has their stop loss, and they were first in the order book, meaning that they put their orders in before you did, they're going to get filled before you do. And so if that 500 Bitcoin gets filled and then all of a sudden your order doesn't get filled, you might get liquidated because your stop loss order doesn't get triggered. And so if there isn't volume in the market, if there isn't liquidity for your order to get filled at that price, even if you set up your order completely correctly, you still might get liquidated. So if you deposit money onto a leverage exchange, whatever you deposit should be the maximum amount that you're willing to risk in that trade, and you should be willing to lose all of that if you do deposit onto a leveraged exchange, because your order might not fill and then you might get liquidated.
People just use leverage as this, when people look at leverage, the average retail investor is looking at it as a way to increase their position size so that they can make a bigger ROI on their investment.
Yeah.
When in actuality, it's used to minimize risk. And so the problem with that is you have these new guys that'll throw on 1 to 3x margin. Some of them even using futures for 100x plus. And so they get on, they throw these huge margin positions, not having any idea what's going on, and they're just immediately getting liquidated. And so one of the things we want to talk about to start off this video and start off the podcast has just been talking about risk management, talking about trading plans, some of the advice we can give you guys as far as how you guys can be profitable, how to minimize your risk so that you're not sacrificing so much for each trade, and how you guys can actually go about making money inside of this market, because I know risk management is the biggest lesson that any trader and investor can learn. I mean, I think that rule number 1 for any investor has always been only risk what you're willing to lose. And I think that once you've kind of understood that in whatever you're investing, you've already understood that you could lose all of that at any given point, then that's when you have to start learning risk management. It's not Elliott wave theory, it's not support and resistance, it's not this and that, it's really risk management. Because risk management, understanding how to minimize your risk, you're going to be able to create longevity in your portfolio, you're going to be able to continue to get those consistent wins. And I mean, if you have a plan in place when you are trading and investing, having that plan in place allows you to kind of distance yourself from those emotions that you're going to feel with trading your money and actually putting that money out there to be either lost or you could make money off of it. And so having that plan in place is going to allow these new guys that are getting into it a way and a formula to actually profit. And at the start of this, they probably won't be profitable. They'll make a lot of losses. But at least if you're setting a stop loss, at least you know your plan before you go about actually taking a trade. When you do lose, you're going to know what you did wrong, and you're going to be able to take that newfound knowledge,
as a lesson,
exactly, and apply that to future trades. And so that's probably the biggest thing with the trading plan, is it's not so much about being right or wrong, it's what are you learning from each trade. And if you do have that trading plan in place, and you're taking those trades, you're actually going to have somewhat of a rule book and a guideline to base off of, and that's going to allow you to kind of judge what's coming and what you can expect to see moving forward.
And the other thing that risk management really helps me with personally is not putting so much pressure on myself. One thing that happens with new traders is they go, okay, I'm going to come over and I'm going to start trading these markets. Oh, I took a trade and I was wrong. Oh no, I took another trade and I was wrong. Oh no, I took another trade and I was wrong. Oh, I took a trade, I'm finally right. So you take 4 losses and then take 1 winner, and you're like, oh no, how am I ever going to be profitable unless I'm winning more than 50% of the time? And then you start to put all this pressure on yourself to get a 75% win rate or something like that. And you just start taking all of these trades and all of these trades expecting to get a 75% win rate, and you're losing, and you get discouraged. When you go into the formula of risk management and then you say, okay, I'm going to win 30% and I'm going to have a 10% stop loss, and then you realize that with a 30% gain and a 10% stop loss, that means your losers are 10% of a loss and your winners are 3% of or 30% of a gain. And then you realize, oh, I don't even have to win 50% of the time to be profitable, because when I lose, it's so much less than when I win. And that changes it around. It makes it so you don't have to put so much pressure on yourself. Then you go, oh, I just lost 3 trades in a row. Who cares? Who cares?
Exactly.
I only need to win 33% of the time or 40% of the time to stay profitable in the market. And it makes it so that you're focused on your form, like you said, learning a lesson from every single trade, focused on your trading form. Make sure that you're really thinking in terms of taking that trade, writing down where you entered, making sure you have a target, a stop loss, writing down in detail why you took that trade, what indicators, what Elliott waves, whatever thing that made you decide to take that trade. And then you can learn from those trades, and you have this frame of personal education rather than just discouragement.
Right.
You're not just building an environment of discouragement.
I think one way you could break it down, because I'm sure a lot of people that are watching might not understand all of the same terminology that we use. So I think that something that's really important to talk about is a trading plan is really just a guideline that you set yourself for how you're going to go about taking a trade. You might have a couple different trading plans, maybe you have a couple strategies, and a trading plan is really just a strategy that you use to profit, and it's a guideline. You have a stop loss. What is your range for your stop loss? I use anywhere from a 1 to 3x risk to reward ratio, sometimes higher than that if the setup's right.
So that means that you have a 10% stop loss, maximum willing to lose, and a 30% gain.
Exactly.
1 to 3.
Exactly.
Right.
And so that's the way I'll structure my trading plan is I'll know the reasons for why I like the trade. I'll see the parameters. If it kind of follows, I see a trade that's breaking out or something, and I'll say, okay, this looks like a good setup. I'll take my entry at this price. I'm going to set my stop loss at this price, and I'm going to take my profits at this price. And once I know all of those things, on top of that, I know exactly how much I'm going to risk for my stop, anywhere from 1. Sometimes I'll even risk less than that. Sometimes it could be, 0.5%, or if I wanted to do something a little different, maybe I risk 5% in the trade and then have, 30 to 50%. And so it really just depends on what you're willing to risk.
And the setup.
Exactly, because it'll vary in each one. And so,
do you always make your trading plan before you actually take your trade?
Yeah, that's probably the biggest rule that you can take away. Always have your trading plan. And you have to have your trading plan in place so you know exactly what you're going to do, how you're going to manage that trade before you even market bought it or before you've even put the bids in place to actually accumulate that position. And so your trading plan is really just the guidelines that you're going to do for taking that trade. And then from there, really comes down to managing that trade. And the management should really not be that strenuous. At that point, if you already have your trading plan, you should already have your stop loss programmed into it. So once the trade either goes right or goes wrong, you should just be sitting there watching it. There really should be no upkeep from your end necessarily. If you are in profit, maybe setting a trailing stop loss so that you're guaranteeing those profits. Because that's the thing. I mean, once you have the trading plan, you've already put yourself at a strategic advantage over the rest of the market because the majority of people do not do that.
Don't use trading plans.
And so if you have your trading plan, you're going to be profiting significantly more. And if you starting off and you're losing a lot, fine-tuning that trading plan is what's going to actually keep you from profiting. And so you fine-tune that trading plan, and then that allows you to kind of just distance yourself from the rest of the market. You can be aside, you can be away doing your own thing. You don't have to watch the trade. You don't have to be at your laptop all day. You can just kind of set the parameters and let it go. And then from there, all it really is you finding trade setups and then counting down your averages. What are you averaging? How much profit are you getting every month for every trade? And then that's going to kind of create that guideline for you. And
for you, does that take a lot of emotion off of the table too? When you have a trading plan, you don't care as much about what direction the market's going.
Definitely.
And it just makes you kind of less emotional.
Right. That's 100%. That's the reason why you have the trading plan, because your emotions are what's going to make you get wrecked when you are investing or trading in a market. If you have a trading plan, it allows you to kind of just stick to a plan and then say, you know what, whatever outcome the trade goes, I'm fine either way. I'll accept it and I'll move on to the next one. And so that's kind of why you do structure a trading plan. But then the next thing I'd say is having a trade journal. And I know that this is something that you kept back in the day. Was having this trade journal, because at the end of the day, if we have a trading plan, we now have a guideline for profiting. Now, a trading plan or a trading journal is going to actually be where we take every trade we've ever taken. We know exactly where we entered it, we know where we set our stop loss, and we know how much profit we made, whether we made a loss or whether we made profit. And we're logging each and every one of those trades we're taking. That's going to create a guideline for us so that we have a method for profiting, and it's also going to allow us to keep track of all of the trades we ever took, so we know why we took the trade, we know how we messed up, and we're actually able to learn something from all of that. And that, I think that's the real biggest lesson for these new guys is don't try and overcomplicate being right or wrong every time. Have a trading plan and then have a trading journal so that you're actually logging what's taking place.
Just try to learn.
Exactly.
Yeah, just try to learn. You're going to make mistakes. You're going to do cool things. You're going to impress yourself. You're going to all those different things. But you want to log those emotions.
Of course.
Map them out. And yeah, no, definitely. I find that I actually do my best trading and my best analysis when I am writing down my thoughts and feelings. You know, and or even just talking with somebody else about like why I took a trade. That kind of open discussion and communication about the setup and where you went wrong, where you went right, what the setup specifically was, why you took the trade. That is so useful so useful information. And the other thing along with risk management, I think goes along with it, is portfolio sizing, position sizing specifically. And this is more for like shorter term trading account is what I'm talking about. And that goes along with when you take one of these trades where you have your target and your stop loss and your entry price, you really want to make sure that you are aware of how much you put into that trade. You know, like what we were talking about a few minutes ago when we started, is you don't want to go all in on that trade.
Right.
And that also reduces your emotion, allows you to stay more clear-headed and be more logical about when you're writing in your trading journal and all of that type of stuff. You just have a lot more of a level head.
Position sizing really is so important. I mean, if you have your trading plan basically becomes worthless if you don't understand position sizing, because if you have $5,000 that you're looking to trade and invest, and then you go ahead and put all $5,000 in one trade, even if you are setting that stop loss, I mean, if you would have taken, you know, maybe $1,000 or maybe $500, and then you take that amount for the trade and then set your trading plan with your stop loss, you're going to be risking so much less amount of money, and you're still going to be getting that profitable return. And so it's like, one of the things is a lot of new guys that will start trading plans and they'll start risking smaller amounts, they will start getting discouraged because they're not winning as much. They don't see their winners being as big as they'd like. Because, I mean, if you put $5,000 in one position and it goes 10%, you're making way more than if you put $500 in and then it goes up 10%.
Right.
And so a lot of these guys, they get into crypto, they start making these huge trades, big position sizing, and they'll see their profits go up, and that's really dangerous to have happen, because they'll start making a lot of money with big position sizing, and then when they actually go back to learning the fundamentals on how to use risk management, they get discouraged because they're not making as much, and so they continue to stick to the methods of
So you're rewarding bad habits.
Exactly.
Yeah.
And that, I think that's really, I know for me personally, I did that back in the last
run.
Oh,
same.
100%. Exactly. And I think that's why we got liquidated many of different times trying to margin trade as well.
Yep.
Same concepts, just wrong position sizing, not having a stop loss, or if you're setting a stop loss, having it just too over leveraged in general.
And ego too. Ego gets, you know, trading will take your ego and completely destroy it and obliterate it. Like, there's no thing that you could learn in this world that will take your ego and destroy it more. Because any time that you get all fancy with yourself and you're like, oh, look at me, my name's Dallin freaking Anderson, and I have all this Bitcoin, I'm going to deposit 1 Bitcoin over to this exchange, I'm going to go 50x leverage because I'm the smartest, I know Elliott wave theory, and I'm the smartest trader in the whole world, and I know this is an ABC correction. And you just go and you go max leverage, and then you come back the next morning and you're like, oh, there goes $8,000. Whoops, I didn't mean to just send $8,000 into the air because of my own egotistical idiot thinking. But that will happen, I promise you, unless you learn how to do the things, teach yourself good habits, and reward good habits. Don't reward the bad habits, because then you'll keep that ego from growing too big. For me, what I had to do, I basically rewarded bad habits till my ego got so big that I had to, like, kind of destroy it, like, by a big enough mistake to make me humble, you know?
Yeah, exactly.
So don't do that. Instead, just reward good habits so you don't ever grow your ego to the size that I did.
Exactly. Listen to Peter Brandt and all those old heads that really will just hound all of these really conservative traits into you, because at the end of the day, there's a reason why those guys are consistently profiting after all of these years. They don't take these huge, crazy risks. And I'm honestly the worst person to sit here and tell you this advice, because I'm all in on cryptocurrency. I've been telling you guys that I'm all in on cryptocurrency and have been for months. So obviously I am not the greatest mentor for that. But what I can say is I've taken the calculated risk within myself that I already know 100% that all of the money I've invested into crypto I can lose tomorrow. And I've accepted that. And it's something that you all have to kind of understand. But with me investing in this money, Shorter term trades I take, it's so much more important that you do practice position sizing, and that's one of the things that I do with my portfolio. Long term, I'm less worried about that, and long term I will put bigger positions on. But for my short term day trading, every day trade or position trade that I have open right now and in the signals that I have posted, those are all shorter term trades. And it's much better to practice position sizing with those and practice risk management, setting stop losses anywhere from, I'd say anywhere from about 2 to 10% is generally how I structure my stop losses. And if you're doing it like that, you're going to be profiting, and you're not going to be so worried on the outcome. You're not going to be so worried about being right or wrong, and you're going to be able to actually consistently profit. It's really just when we try and get over leveraged, we try and get FOMO, this fear of missing out. We see a trade going up and we get real excited. Because as long as we have a plan in place, everything is history. It's so much easier to trade and actually be profitable when you have this plan.
Yeah, and also, aside from that, Donovan, you're young. And so Donovan going all in on crypto, if everything goes wrong for him, he doesn't have any kids, he doesn't have a mortgage to pay, he doesn't have a car payment, he doesn't have anything that would matter if he lost everything.
Exactly.
And so that's why, and you do risk management on your portfolio. It's just you don't have any other investments except for crypto. And every time he gets US dollar, he throws it in. He can't even keep US dollar on him for more than 5 minutes.
I currently have $2.45 in my bank account. And I've got like a few $100 cash, if that, maybe like less than $200 cash. And I have
stacks and stacks of crypto.
Yeah, I can't stop buying it. It was the same way back in 2017. I remember just every cash paycheck I'd get, I just put it into crypto. And at that time, I was losing a lot of it. Really just trying and margin trade. That was the thing. I think it's funny that we're actually bringing up this video and talking about these topics, because that's one of the biggest losers that I've ever seen between people close to me and myself has been margin. Yeah. And I know so many people are going to get greedy and try and jump on margin trading as soon as they see these markets going up. We're starting to see that. We're about to see a major breakout coming in these altcoins. First higher highs being built inside of this new bull market. And there's going to be a lot of money flooding into this. And it's really important that everybody keeps a level head right now while the markets are really calm. And make sure that you understand these lessons that are being taught to you guys right in the second, because when the markets do start to pick up and things get really crazy, the emotions that are attached with that are just so insane that it's going to be really hard for you guys to keep level heads, especially if you're new and just getting into this. I mean, if you don't know how to trade technical analysis, you don't know how to use proper risk management, position sizing, when the markets start going parabolic, you're going to be grabbed by the balls, and the markets are going to have you the entire time. There's nothing you're going to be able to do about it. It's right now when the markets are cheap, right now when the markets aren't going insanely parabolic, that you want to be practicing the right fundamentals that you can actually use to profit, because when it goes up, all jokes aside, it's going to go crazy.
Yeah, exactly. The delusional aspect of the market starts to take over. Everybody gets like hysteria basically and just goes into this mass trance, and they all just become like they were hypnotized or something. And so once you're hypnotized, once the bull market's in, you're hypnotized. And same thing with the bear market. It's just a different kind of hypnosis, trust me. Yeah, but it's this accumulation in between the bull and the bear where everything is like level-headed and logical, and that's what we're going through right now, and we're finally shifting back into that bull. So, and speaking of which, I think that one of the things people will probably do in this bull market, and what we saw a lot in the last bull market, is take profits too early and try to short a bullish market. So let's talk a little bit about fighting the trend.
Yeah, I mean, we're already seeing lots of that. I mean, I've seen it on Twitter a lot, especially with when Bitcoin was still trading below 8K, you were seeing a lot of people trying to short every local talk that there was, and I kept seeing people getting stopped out of those positions, and that's one of the things that's going to happen, and it's something we can talk about right now, is just the fact that as the markets start to break out and make higher highs and start their bullish uptrends, you don't want to be taking your profits too early. If you were somebody that, FOMO'd in at the top of the cycle back in 2018, 2017 sometime, or maybe you were even somebody that was just kind of averaging into this bear market, you're not going to want to sell as soon as you hit 30 to 50% profit or you start to hit a break-even point. You want to be averaging in the entire bear market, even if you FOMO'd in at the top, and then when the market actually starts to go up, you guys want to be holding the length of that trend. Don't try and take profits too early, because that's one of the biggest things that the majority of retail investors are going to do as this bull market starts. They're going to see Ethereum, they're going to see XRP, they're going to see all of these cryptos start to go up, and they're going to immediately start taking profits. They're going to assume that they'll take some short-term profits now, and then they'll just rebuy the dip. But the problem with that, nobody knows when the dip is. Most people aren't proficient traders. And what's going to happen is Bitcoin, the other cryptos are going to pump, and it's going to completely leave you behind. And you're going to sit here and try and mess around, try and trade every swing for the max profit, when in actuality, the only way that you're probably going to profit in this next cycle is holding the long picture trend. And so that's the advice that I could give as far as not selling too early. Now, other advice would be like you just touched up on, not trying to short every top, because I know that you've been talking about how that's been happening a lot recently as well.
Definitely. I see it a lot on Twitter. I see people already trying to short BSV. I see people are trying to short BSV when it was making its little triangle pattern, and then it just broke up. And I told everybody, I was like, listen, I've noticed a lot of people on Twitter are trying to short BSV. They're probably going to get stopped out because their stop loss is right here, and then the market stopped all of them out. And it just mooned right past their stop loss, actually. And that's just going to happen over and over. And, one of the things that does happen with taking profits too early, and I've seen this a lot, is people do buy the top or somewhere near the top of the last cycle, and then they ride down, and it takes years. They've been holding this investment for years and years, and they don't sell. They're like, well, I'm just going to sell at break even. If they're smart. Some of these people aren't smart, and they sell the bottom. They get so scared. They're like, I don't want to lose any more than I already have. So they sell the bottom. But if they're a little bit smarter than that, just a little bit, they usually wait until they're at break even. And then they get out on break even because they went through all of this emotional trauma and pain of, I had to deal with this 2-year bear market, and so the second that they're in break even, they get out and they're like, whew, I'm at break even, when they're selling the point that the market's just about to break its previous all-time high and go parabolic and then going for the real gains. And so don't be the person that just because of dealing with the emotional struggle that is going through a bear market and having money inside of something that is losing value, and forget about that. Try to focus on the fact that it will be past its all-time high, and think about that instead. Think about taking money out in profit rather than at a break-even point.
All I really have to say is, for anybody that is skeptical about the markets breaking all-time high, you just have to look at the big picture cycle. If you go back and look at 2013 Bitcoin to 2016 Bitcoin, and then see what happened after 2016, and then go and apply that same principle to all of the other altcoins with the same years, you're going to see that all of them broke all-time highs. They all had these big bearish cycles that were really scary and everybody would have been shaken out of. But what happens is the cycle continues to repeat and we go into these new all-time highs. The current cycles that are forming now are the exact same thing. I've been very transparent with my portfolios recently, especially my long-term portfolio. Recently we had Tezos really starting to break out. We had Ethereum that started to really lead the alt charts once again. And now I think the XRP is starting to actually catch up with those. And I've been very transparent with telling you guys that I've yet to take any profits.
Haven't you doubled your bag already on Tezos?
Yeah, I've actually over-doubled my money.
Over-doubled your bag on Tezos. Congratulations, man.
It's been the biggest trade of 2020.
That was my BSV. BSV was that for me. So
yeah, it's really exciting. I mean, I think that the start of the alt season was Engine Coin back in 2019, and then Chainlink. And I think from that point, it's been like ETC, BSV, Dash, and now we're starting to see kind of the next group of majors starting to perform well. And so it is really exciting that Tezos is one of those up there.
So those were probably the market leaders coming out early and breaking out early, and we're probably going to see breakouts in the rest of the coins following
sure.
those ones.
Yeah, obviously the majors are always the first to get that new money.
Yeah.
We even still have majors right now that are lagging. I mean, XRP, I think XRP's headed towards 45 cents. That's my next target for XRP. I think we're going to have a major breakout coming soon. I had a couple resistance levels drawn, and we've just broken from those so convincingly that I think that from now on we're about to see significant pushes on the bullish side, followed by short-term corrections, and all of these short-term corrections are just buying opportunities from here on out. The high caps have basically finished their impulses. I think we'll see a couple more impulsing and then short-term correction, and then I think that when those high caps start to correct, that's when all of these mid caps are going to start to see parabolic runs. And so right now we have a big opportunity. If you were somebody that was making lots of money trading these high caps, if you're a short-term trader, obviously taking profits right now isn't the best or isn't the worst idea at the time, but also understanding that long term there's still significant
much upside.
Yeah, that's why I'm not taking profits. I'm here for the long term. Short term day trades, yeah, I'm going to take profits on those, but the biggest majority of my position is in my long-term bags, and I'm holding those the big picture trend. You can't go wrong doing that, in my opinion. I know that you've made more money holding the long-term trend than you ever made trying to complicate trading.
Yeah, definitely. Yeah, much more money. The trading works sometimes, but overall the long-term stuff has definitely proven to be the most profitable of all.
It's easy, too. You don't risk anything when you're just holding, really.
Yeah, so there's the whole market is just honestly breaking out and getting ready for big picture movement. We're just seeing like literally the first little baby steps that are taking us to that place.
It's really crazy to see this stuff because we're so early, and looking at the charts, it just reminds me of 2016 all over again. It's almost the exact same setup. Really, we just have more institutional development now. We have more structure inside of the cryptocurrency markets than ever before. And I think that now that the infrastructure is there, we're going to see the significant majority of the money that's going to flood into the market. This is where we're going to see, that real institutional
adoption.
Yeah, and it's going to be a really profitable cycle. And I think that this is really going to take us into that mainstream development where we have institutional money. Not only that, but we have development in the real world with these cryptocurrencies as well. And so I think that the cycles have been getting shorter, and been getting less parabolic, and they've been getting longer in duration. But I think that we have a real opportunity for this cycle to be really different than anything we've seen, because we do have this pattern that's playing out where the cycles are becoming less parabolic and they're taking longer. But at the same time, we now have institutional money with the real billions of dollars that are going to be buying crypto. And so could we theoretically see an explosion in a market cycle bigger than the previous cycle?
Were these just mini cycles?
Exactly. Yeah, and that's something that can happen.
That's what I've thought too. I've theorized that we went through 3 mini cycles and we're about to go into a macro cycle, which would be pretty amazing. Yeah, no, and one thing that what you were saying about earlier too, when you don't want to, or what we were talking about with not shorting bull markets, and how you mentioned that you want to buy the dips. Really, the reason that you do that is because in a bear market, the bullish rallies, the moves on the upside that happen on the way down, so the little bounces and rallies that happen are so much smaller than the bear legs that you want to be majority short in a bear market, right? That makes the most sense, because the upside moves are so small in comparison to the downside moves that the risk to reward favors bears. And the reason that you don't want to be shorting all of these bull market moves is because what we see happen is we get this huge bullish leg up, and then we get a little correction, and everybody thinks we're going to get a big correction when we're in a bull market, and so the bear moves are so much smaller than the bull moves that it just makes much more sense to be buying the dips rather than trying to short tops, because the probability that you're going to be able to successfully do that just is so significantly lower. than when it's in a bear market. So,
and I think that that's some bit of advice that we could give as far as kind of how do you go about averaging into your positions, because that's really important as well. I mean, now that we have started this bull trend, I've been thoroughly convinced that the bull market started since December of last year. A lot of other people are skeptical. I mean, the cycles repeat, and this is just the same sort of disbelief phase that all of the other cycles have repeated.
Altcoin bull, because we are Bitcoin bull market like 3,000 per coin.
Right. Some altcoins did start their disbelief phase. They started their first bullish impulses, but a lot of the other altcoins fell to new lows, and so altcoins in general were still in this bearish downtrend against Bitcoin. But I think that now we've actually started the bull trend in not only Bitcoin but altcoins as well. And so now what we're going to see is kind of this new trend where we're going to see a parabolic run, then we're going to see short-term corrections before, like you said, just kind of building up this parabolic trend until we go higher and higher in this next cycle. And so something to be aware of is the fact that dips are for buying. Any dip that we're going to see from now on for the next couple years are a buying opportunity, whether it's 5, 10, 15, 20%. I don't think you can go wrong just accumulating in the bearish cycles at all. And so the way that I'm personally going to be looking to accumulate for the rest of this cycle is I'm going to be looking to 15 to 20% bearish days in the altcoins and Bitcoin. Bitcoin about 10% because it'll be less volatile. But I'm going to be looking for those 10, 20% swing days where we have just blood in the markets, and that's where I'm going to be looking to scale in. And I think that that's some of the best advice that I can give these new guys is the fact that as we continue on in these trends, the short-term corrections will be volatile, 15, 20% down days, and you could have multiple days that we see downside like that.
Right.
And that's where you want to be buying, because when the bulls actually do come back into the market, we get those green days, those 15 to 20% down days are completely gone in the course of days.
Yeah. They get engulfed by all the bullish movement to come. Yeah, no, I remember how many times in the last bull market that I saw a dip. In fact, my favorite thing ever in the last bull market was to see a dip. Because every single time that we saw a dip, when it was the dip when we broke out to 500 per Bitcoin, then fell to 250, then when we broke up to 750 per Bitcoin and fell down to 500, and then we broke up to 1,000 and fell down to 900, and then broke up to 5,000 and fell down to 3,000. And there was every single one of those dips provided the most perfect risk to reward ratio, perfect if you are learning about trading plans and risk management and all the stuff that we covered today. When those 20 and 30% dips came, all of those factors were perfectly aligned for you to take a position. And in this next bull market, it's going to be the same thing. Exactly. Just like when Bitcoin dropped from 14,000 down to 6. That's exactly the type of stuff that we're talking about. And some of those corrections probably won't even be as big as that one.
I doubt they will.
That was actually a pretty deep initial correction that we saw. So,
and that's something else I kind of want to talk about. It has nothing to do about what we've talked about thus far, but I've seen a lot of people trying to talk about manipulation in the market, and this is really what I see with retail money in general. Retail is always trying to talk about manipulation in the market, and that's the funniest part about it, because anybody can say manipulation is really anything. Some buying the market is manipulation, or some taking profits is manipulation.
China FUD.
Yeah, all of this. And that's probably the go-to excuse that any retail investor is going to go to. Oh, it's manipulated. Oh, I can't profit because of this. And I think that was one of the big things that we saw from this bubble from 3,200 to 14K with this correction that we've talked about. A lot of people have talked about the, is it plus token or one token? One token.
One token.
One token was the Chinese Ponzi scheme that a lot of people have viewed as that was the reason Bitcoin pumped. And to be quite honest, I find that just laughable. I think
it's just retarded.
I mean, maybe their liquidity selling on the market dropped us 10% extra, but I don't think that was the reason for the correction by any means. Because what we saw, and we have analytical charts that can prove this, we saw more 1,000 Bitcoin addresses pop up in the December lows in the rally to 14K Bitcoin than we've seen pre-Mt. Gox days. So back when Bitcoins were worth a few cents, we now have more 1,000 Bitcoin addresses that are holding 1,000 Bitcoin plus than we've had since back in the Mt. Gox days. And so what that tells me is that institutions have bought the dip. It wasn't plus token, it wasn't manipulation, it was institutional investors buying the dip, and that's why we saw such a huge price swing in Bitcoin going from $3,200 to 14K, the biggest leg up that we've ever seen to start a new bullish trend in Bitcoin.
Yep.
And it's because of the institutions. It wasn't because of a Ponzi scheme. It wasn't manipulation. The reason we dipped after that wasn't manipulation. It was because, with the price swing that crazy from 3,200 to 14K, it's not just going to immediately keep going straight up. It has to build that momentum. You have to have sellers. You got to think back to all of the different people in the bear market that were just going to be looking to take break even when that rally came up, and that's exactly what they did.
It just goes to show that, like, the narrative, the thing that goes to the news headlines, all the stuff that sounds fancy and extravagant or interesting, that to hear or listen to, those types of things, like, it's just usually people trying to boil down a complicated thing of hundreds and hundreds of variables and exchanges and different things that happen all across the world and saying it was only this. And you can't take something, a complex organism, complex digital organism like Bitcoin, and say that one thing caused this. It's not a very logical approach. It doesn't make sense. So I agree. I don't think that it was fun. I completely see in the chart, you can see inside of the charts that institutional money came in. The volume, everything, you can literally see that the chart is saying big money is here.
Yeah, exactly. It's really exciting overall looking at how the charts have played out, because that rally from 3,200 to 14K has almost the exact same market structure as the rally from 5K or 3K upwards of 20K Bitcoin in the last cycle. That final euphoric wave that we saw. Yeah, the real big euphoric wave that we saw. That was really just that. All of that euphoria just kind of taking foot, all of that money, all of the new money just kind of boiling up, creating this big bubble. And that's the exact same market structure that we saw back in the December lows of last year. And so I think the reason why we're seeing such a major price swing and such a big impulse to start this new bull market is 100% the reason that institutions are involved with this. And that's why I think that we could very easily see a bigger bull cycle, a bigger parabolic move than all of the previous combined, because all of the previous ones were retail investors. This is institution.
This
one
is a super cycle.
Exactly. And that's why I think that it's going to blow everybody's biggest expectations out of the water. People hate on my price targets, but I'm very confident in what's coming over the next couple years. That's why I'm not selling by price targets, but why I'm selling by time frames, because the cycle itself is more important than any price that it could go
You're watching price targets, but you're selling based on timing.
Yeah, that's the goal for this next cycle. I think that it'll be a little bit more accurate to do so, because based off of the cycles, I think that smart money plays based off of time frames and cycles more than they play off of price, because price doesn't mean as much as I think that we like to believe, especially with these altcoins. That's a big debate that we have. How do you price an altcoin that has so many different use cases? It has all these different variables that it can use. It could be a currency, it could be a store of value, it could be all of these different things. And how does price kind of factor into all of this? And I think that price itself is kind of overblown as far as how we look at these altcoins. And I think that real world use case is going to play an even bigger parallel towards this new cycle. And so there's so many different variables that actually go into these things.
If you're purely worried about price in a bear market, you might sell at 3,000.
Right.
You know what I mean? But if you're thinking about the big picture of what's going on, and from a cycle perspective, like you said, you probably won't sell at 3,000. So I think that's where price is definitely useful, but I think worshipping price or idolizing price as the only metric is where people kind of go wrong and then end up making bad decisions because of that. So.
Exactly.
But we've talked a little bit about risk management. We've talked about making trading plans, talked about taking profits, mainly about taking profits too early. One other thing that people forget to do sometimes is not sell at all. They just don't take any profits at all, which is okay if that's your only strategy, but also if there's an opportunity to take profits that makes sense it can also be risky to hold 100% in.
HODL is a great opportunity for the bull market, but you got to take profits because HODL is stupid if you're not going to take any profits. There's no point in investing in this market, trading in this market if you're not going to take any profits. I get if you're a long-term bull, and that's why I do strongly believe that everybody should keep a long-term with whatever their long-term bags are. If you believe in XRP, if you believe in Bitcoin, Ethereum, always keep a bag that you let go for the majority of its cycle. But you got to remember that if you're not taking profits, you're just basically wasting your time even trying to invest, because you have these big parabolic bubbles where you can be up over 100x plus in your initial investment. And if you don't take any profits, you're going to go back to break even and potentially even take a loss. And so why would you do that when you can be taking profits and then taking those profits that you make and then redeploying them in the bear market?
Yeah, exactly. So yeah, make sure that, I like to have a bag that I don't sell at all ever, that's separate from profit-taking portfolio, but taking profits is extremely useful and actually helps you reduce some of the emotion in the markets when you put into that dollar tether. And then the other thing is just taking too much profits, like selling 100% of your position when something breaks its all-time high, and you're just taking it all at once right at the start, instead of 25% off, another 25% off, another 25% off, and then here's the 25% I'm going to keep in long term.
Exactly.
That makes a lot more sense. And then FOMO and panic selling, I think we kind of discussed this. FOMO really is just boiling down to when the market is going up, it's rising very quickly, and you get scared that you're going to miss out, so you buy too high.
And that's terrible. That's the biggest mistake that these new guys are going to make getting into this, because if they're going to start trading without a trading plan at all. They're just going to have their money and they're just going to buy random things, and they're going to buy pumping coins, and that's just the way it works. Retail money buys as the coins are going up or price is going up, and they're selling as price goes down, and that's the reason why they lose inside of this market. And that's what you're going to see. I know I've seen it in my Discord. Now that my Discord's getting so big and I have so many people, every time we see a major alt swing and we see a lot of money coming into crypto, I immediately see so many different people talking about how they're going to buy this as soon as it's going up, and it's just people FOMOing in everywhere, and that's the worst thing that you could do. You want to be buying when everything's real cheap, when everything's real low, when it looks like it's just going to fall off the face of the earth and die forever. That's when you want to buy, because when the market turns around, you want to be taking your profits instead of trying to buy while smart money is taking their profits. You don't want to buy smart money's bags.
People think like, oh, I'm going to wait until it's going up so that I make sure that I'm getting in when it's confirmed that it's going up. But it's usually when you wait for confirmation, you come in too late. Now, you don't always have to be the first person in either. Like, you don't need to be the first. You can wait until you do see a good setup, but you don't need to wait too long till you're too late to the game, or you're so late that you're buying a top instead of getting in at a good entry. So yeah, FOMOing, definitely want to avoid that. And then the opposite of FOMOing is panic selling when the market's dropping, so that you're scared you're going to lose more than you want to. So you panic sell, and then that ends up being the exact bottom of that swing, and it rallies back up to where you bought.
And you guys are going to feel that, especially if you got into the bear market and you've already witnessed what it's like to buy something and then just have it completely fall off the face of the earth. You guys are going to have a little bit of an advantage with this moving into this bull market, because you already know what it's like to hold something when it feels like it's just going to keep going down forever. So if moving into this bull cycle, you're going to see the same sort of thing, but you got to understand that the retraces are going to be very far and few between compared to the overall parabolic bull nature of the market. And so if you're getting into this, you've already been in the bear market, or you're just getting in now, and you buy something, you FOMO in, and then it starts correcting, just hold. Don't try and take any short-term losses. It's only going to increase your tax situation. It's only going to make you lose more money. It's only going to create more frustration within yourself for losing the money. And so really, if you're buying, buy it and hold. if you see a short-term loss, hold through that loss and just look to kind of hold the majority of this bull trend moving forward. And obviously you want to be taking profits, because what's going to happen, same thing that happened at the last of the bull cycle, people aren't going to take their profits, they're going to be buying a lot at the top, and then they're going to hold all the way back down. And so you got to remember to take those profits. You got to remember that the dips in the bull cycle, they might seem like they last a long time, but in actuality, it's just a small
It's short-lived.
portion.
Yep.
Yeah, exactly.
Yep. Stay clear-headed. Do things like, do things physically in your life. Sometimes we only talk about technically what to do in your certain situations on your computer, but another big thing to stay clear-headed in all of this is, focus on what you're putting into your body. Try to think about your diet. Try to think about exercising. Try to think about meditating, being in nature, doing things that make it so that your body is in a good state of mind, a good state of consciousness, so that when you go to these charts and you're in these situations, you just naturally make a smarter decision because you're in a state of mind, and your body and health and your mind and your spirit and all of those things are in alignment, and it just makes it so that you do less stupid stuff, basically.
Exactly.
And you remove a lot of that emotion. I think that's a big thing for people to remember. That's almost just as important as learning all of the technical stuff,
Humans are emotional creatures, and so if you wake up and you're pissed off at the world for whatever reason, and then you go and try and trade for your day, you're not going to be as profitable as the person that had just meditated for 30 minutes, sits down, and is clear-headed and ready to kind of go about things in a non-emotional way, just completely unbiased and just ready to step down with what the technical
If anything,
show.
he's motivated and excited after something like that. So
Exactly.
Yeah, that is huge. In fact, for me, I think that comes even before the technical stuff, if I really think about it, because I learn the technical stuff at an exceedingly quicker rate when I'm in that state of mind, So, self-development, those types of things. If it's stuff, some people hear that, they're like, diet? What the heck? That's not going to affect my state of mind. Everything that you eat turns into the cells in the body, like your skin, your cells, your molecules. Everything that you're made of is made out of what you eat and what you drink. And so you really, really want to make sure that your diet is clear, because that will have a large effect. So, sometimes things that don't make initial sense to you, if you actually try them out and think about it a little bit, will prove to be true. So
yeah, definitely.
That's pretty much everything I wanted to talk about today. We went over everything we had written down. Just to quickly recap, just risk management. Make sure that you have a target stop loss in your short-term trading, and position sizing so that you know how much you're putting into every single trade.
Don't over leverage.
Yeah, don't use leverage if you're a beginner, and don't over leverage if you're more than a beginner.
I'm just going to go ahead and say this right now. If you're watching this, don't use leverage. Because chances are, if you're watching this, you probably don't know how to trade.
Yeah, exactly. If you're like a really good trader and you already know how to use leverage successfully, then maybe, but so risk management, super important. Trading plans, like we just said, target, stop loss, all of that. Taking profits, make sure that you don't do it too early. Make sure that you're selling some so that you don't get stuck not selling any of it, and that you don't take too much all at once. You distribute taking your profits across multiple areas in the bigger picture trades, bigger time frames. It's really just a balance, a happy medium. You don't want to go.
Really just like the fundamental of understanding on how you could profit, what kind of steps you need to put in place so you can profit, kind of the guidelines that you set for yourself, how to make sure that you're not worried about being right or wrong, just the things that are going to keep you level-headed and aren't going to bring up this emotional attachment to all of these outcomes and these variables that go along with trading. And I know with you guys that are watching, if you're still here tuning in, make sure you guys comment any video ideas that you have, anything that you want to cover, because I know that at the end of the day we talk about these things, but if you guys give us your own input as far as different things that you've had questions about, different advices that you wanted to learn about, we're always here making videos every Friday, so you guys can tune in for the Moonboy podcast. This is really something we've created to help mentor as many people that are getting into this, so that they know that they have sound advice, that they have sound understandings on how to actually tackle the cryptocurrency market and profit, because this is a very volatile market. There's a lot of room for error, and there's a lot of room for profitability as well. But that's why we talk about these things, is so we know exactly what is required to be profitable and what we can kind of distance ourselves from that is going to kind of hold us back in that regard. So.
Yeah, and we have a pretty good idea of the different types of things that you guys want to hear about from a perspective of we've made a lot of these mistakes. You know, we've done a lot of the stuff that we've just talked about today, FOMO, panic sell, all that stuff, improper risk management, leverage, over leverage, all that, we've made those mistakes. But, you know, there's always going to be things that we don't think about, things that we haven't experienced, mistakes we've never made. So, you know, you can comment those below to share those with us. We really want to be, thank you guys for tuning in, and we're extremely grateful for all the people that have been following. Both Donovan's and I's channel has been growing faster and faster and faster. And it is really amazing. Donovan, specifically, huge shout out to you, man. I love seeing your channels grow. Like, I've never seen anybody hit 10,000 subscribers as fast, going from like 300 to 10,000 like you did. I've never seen that happen that fast before. So that's really awesome.
Thank you.
And thank you guys so much for subscribing to both of us.
Yeah, really. It means a lot. It means everything to me, because this has been both of our passions, not just mine, not just his. We've been so dedicated to cryptocurrency since 2015, 2014 times, when we first heard about this type of stuff, and just to see kind of the reaction that we're getting from the people that subscribe to us, all these amazing people out there, both on Twitter, both on Facebook, YouTube, all of the different formations and platforms. It's just really amazing to have you guys a part of the team. Really thankful to be able to do technical analysis, be able to provide this value for you guys, because at the end of the day, we're making life-changing amounts of money. We talk about that. We're always very transparent with that profitability aspect around cryptocurrency, and we want to be able to kind of give that back to you guys, because we remember how hard it was when we first got into crypto, how watching YouTube videos to teach us about stocks and things, how hard it was to actually be profitable. And so now that we have kind of this platform that we can actually help these other people, that's what we wanted to be able to do, just give back to everybody that was there to support us through the last bull cycle, the people that are here supporting us now. It just means everything to us. So make sure you guys always remember to do yourself a favor by leaving a like, comment, and subscribing to both of our channels. Links are in the description of the video. Make sure you guys tune in every Friday for the Moonboy podcast, episode number 6 next Friday. You guys are definitely going to want to tune in for that. Awesome content every single week. Really exciting to be able to do this, and I know that we're having a hell of a time doing it for you guys.
Yes, we are. Thank you guys so much for tuning in, and we will see you guys next Friday. As always,
Peace
stay
out.
profitable out there.